Welcome, everyone, to the Everyday Trader. This is Greg. Good to be with you again. Eric, as always, it's a pleasure to be with you.
Go Cubs, go.
And I'm sure, as some of you may be noticing, we're wearing a little bit of gear today.
Yep. This is a game-worn Mark Grace jersey.
Nice.
So I bought it at the Cubs convention, I think in like 2003 or 4 or something like that.
This is officially a Twins pullover that I went to a game in August in Minneapolis and was freezing and actually had to buy a coat.
Well, in Minnesota, what they say is they have 3 months of bad ice fishing.
Yeah. And I'm wearing who actually is my dark horse this year. I think the Mariners have a shot at surprising some people. I think they've got the best young player in baseball. I know everybody likes the kid down at the Angels, the Shohei Ohtani, and he just put on a show at the World Baseball Classic. But Julio Rodriguez for the Mariners is really good.
You're an equal opportunity fan. You love baseball, and I know you're a loyal Dodgers fan, but you put it out there for everybody. There's your Dodgers, yes. Yes.
I'm still pulling for the Dodgers to win, but I'm just,
you support you love baseball. You're definitely a baseball fan.
I do. Well, we won't spend the entire podcast today talking about baseball. What we thought we'd do today is give you a quick little update on what's going on in the market, both from a technical perspective, some of the fundamental moves that are going on right now. I think from a technical momentum perspective, the market clearly the last couple of days has jumped higher, pushed through the 50-day moving average. Although we'll see where we finish today, we're already kind of losing some of the momentum that we had opened up with. And because, in my opinion, because there's not a lot of fundamental oomph behind why the market has rallied, I don't know if I'm buying into it other than it's just the worst case scenario we now know is not coming to be with this bank situation. I know that's one of the things you mentioned beforehand, Eric, is some of the unknowns are now known a little bit in regards to this banking crisis. And I think that's given the markets a little bit of breath of, okay, we don't have to panic right now, since it looks like, a few banks went under, but it was relatively smooth. I don't know. What are your thoughts?
Yeah, a couple of weeks ago, we talked about the unknown unknowns. And I think some of the unknown unknowns have become known unknowns. And what's known is that the Federal Reserve and Treasury and FDIC, federal government, are going to do what's needed to backstop the banks. Whether that's the right thing or whether that creates moral hazard, there's a lot of things to debate. But I think what's known and how much they'll do it and who gets it, that's still unknown. But we know the Fed is going to step up, and I think that's a lot of the reason that explains the rally I think that we're seeing here in the markets. If you look longer term, there's reasons to be fearful, especially if you look at the term structure of some of the volatility indices. We've got I mentioned to you before we started recording here that if you look at the VIX futures, later this summer, we're seeing elevated VIX, which is an indication to me that the market is pricing in something later this summer that's risky. So looking at the term structure for the VIX futures, they're much higher than they normally would be given what's happening. We got the VIX crashing down today, coming back down under 20 again. So, but until then, I think it's pretty much smooth sailing. I think we've got over the next month or two, and I think a lot of it has to do with assurance or confidence in in what the banking system is doing. Now, there's 2 reports that are normally sleepers that are coming out today and tomorrow, but are going to get a ton of attention. One is the Federal Reserve balance sheet. So this is the H4 report that's published every week, that shows what assets the Fed has on its balance sheet and where they are. I like looking at these and looking at some of the term structure. We did a deep dive earlier, I guess last year. We were talking about the Fed working off its balance sheet, and you can see where the big numbers are in here. So this is going to get a lot of attention because the Fed is going, we're going the other direction, call it quantitative easing or call it something else. The Fed is adding liquidity to the market by buying assets from banks. So tomorrow or today after the close, we're going to get a report that's reported today at 4:30 p.m. Eastern time, the Fed balance sheet. The other report, which is doesn't even rank on Econoday's list of important reports, and that is the F8. So F8 is the assets and liabilities of commercial banks in the United States. And this is a real snoozer of a report. It's a lot of stuff, but it's an aggregate of all these different sort of banks and what they have on their balance sheet. So people are going to be given this a lot of look to see, some of the numbers are going to move between here and between the Fed balance sheet to get, this is one of the unknown. I'm sorry, it's now known unknown, and it might become a known as we figure out what's happening here with the Federal Reserve in terms of the balance sheet, and then also in general with banking and how much help they're actually getting from the Federal Reserve. So I think there's a lot of confidence that we're going to see backstopping of all these mid-range banks. And I think that's an interesting thing. I think there's some second order effects that are going to play out too here, but I'll pause for a second to get your reaction on that.
Well, I agree. It's normally a snooze fest, that bank report that comes out. It's interesting how times have changed and how because of the speed of Twitter, we as investors have to go from, just think of the last couple of years. We've had to go from becoming experts in infectious viruses and how that's going to impact, economic growth. And then we become transportation experts and how long the supply chains are broken and how that's going to impact earnings. And then we become, monetary experts and, the injection of capital and what that's going to do to pricing. And now we're all of a sudden banking expert. I'm a lot more comfortable with the banking part than I was with the infectious disease part, to be honest.
What about before that? You were a constitutional law expert, I think.
Yeah. So it's been
Gorsuch and Supreme Court stuff. So yeah, it's interesting. Here's the latest one. This is we didn't talk about this, but a curveball. Right now, everybody's becoming an expert in the reserve currency status of the U.S. dollar. Have you seen that?
I have. I think most of that is, you know what? It's happening, right? You and I talked about this last year in one of our very first podcasts we did. When we did an event, we went to an event where Paul Ryan was there. And, he mentioned that from the political standpoint, that's one of the big elephants in the room that a lot of the people are not addressing, but it's a legitimate concern in Washington right now, is the reserve currency, the worldwide reserve currency of the US dollar and the status there. And yes, we are seeing more activity this week of, agreements between Russia and China, agreements between China and Saudi Arabia, as an example. That was one of the big ones that got the headlines of they're building an oil refinery together, China and Saudi Arabia. And that's, of course, the first step of, transacting oil in the Chinese yuan. And so is it going to make the reserve currency status of the dollar disappear? Maybe over time, there will be another option. For the last 50 years, the dollar has been the only option to settle international trade. And that might be something that, we may see the euro getting used much more, the Chinese yuan as the Chinese economy grows. I don't think we're going to go from the apocalyptic view that sometimes gets thrown out there on Twitter, where we're going to go from the US dollar being everything to all of a sudden no one wants dollars. I just don't see that happening, not in my lifetime.
It is one thing that we know that gives us, and there is a French prime minister, and he was I think a central banker, who said, it's an exorbitant privilege. And typically reserve currencies, they've changed over the time. It's been the British pound and the franc. Every 100 years or so it changes. And certainly the Bitcoin maxis are coming out of the world. coming out of the woods here, and I hear all the arguments all the way around. I'm a little bit libertarian, but this falls into I'm a lot libertarian. I'm looking at my official libertarian pin here, so there's no question. But it falls in this category of FAFO. You might see that meme going around on the internet. You can Google what that means, but it's so F around and F find out. And we, that's, you mess around, you get, I'd say, tell my kids, you mess with the bull, you get the horns. And it's a scary thing. I mean, there are some parties that want to probably see it happen. And maybe for selfish reasons, because they'll, their Bitcoin positions will do well. But
so you showed your libertarian pin. I got to show that I'm a Julio Rodriguez fan. See?
I know I irritate some people when I tell them I'm libertarian, but I'm more little L than big L. That's.
I'm a baseball fan. That's what I.
Okay, baseball fan. All right.
Starting day. It's opening day. So
this is something that's going to be capturing the zeitgeist. It's getting a lot of attention. You can see the trends on social media turning this way. So something to keep an eye on. I think the U.S. government will defend it to the hilt.
I do too.
They'll die on that hill of letting that status go away. We'll go to war over it, I think. So, what happens there in currency is something to keep an eye on. There's always these cross currents are going on that are happening, and sort of back to the concept of what's happening with the Fed and what's happening with central banks. Listen, what's going to come out of this? I will bet money was we're going to get more regulation, and credit's going to be tighter. The NFIB came out with a survey last week saying that it's asking small businesses, ask the same set of questions every month. And one of the questions is it harder to get credit? And that's ticking up. And I think we've heard the Fed say, we're happy when the market does a job for us. And if you can increase standards, make credit tighter, it achieves the same thing as raising rates. And maybe
and that's what's happened this week, right? I mean, we had both. We had the Fed governor from Boston, Collins, speak today and mentioned that exact thing, that what they've seen happen with the bank lending standards and the tightening in credit has actually done a little bit of their job for them. And in fact, they actually indicated that they may only need to raise rates one more time. I think that was the expectation, that they're going to raise once more at the next meeting and then just hold steady through the rest of the year. So yeah, it was both. I think Tom Barkin also spoke today from the Richmond Fed and said the same thing. So at least I thought it was Boston that spoke, wasn't it? It was
no. Kashkari had some stuff out today, and I think Michelle Bowman is on the board of governors. I'm not sure. I didn't catch it, but this is, there's permanent members and then there's voting members. And so it changes from year to year. You can see who's on the committee to vote. And so their comments, Barkins he's an alternate if one of these people bail out, but paying attention to the people, there's the board of governors that are on all the time. And then, they and Williams, but then some other people rotate in and out and they get a little bit more attention. We got to meet Harker and listen to him. He's a little bit more on the hawkish side and definitely a free market capitalist guy. But he had some interesting thoughts on digital currency here. So anyways, that goes to the reserve currency, the US dollar. I think there's a couple of things going on here that are related, that explain why the market's going higher. And I think a big part of it is not only are we seeing some relief or confidence in the banking system, but recognizing that the tighter standards may make the Federal Reserve less likely to raise rates. And I think we're seeing that as confidence in the market. So why, and it's kind of second order sort of thinking here, second level thinking, because it's not direct, but we'll get some insight, because tomorrow is a big day, right? So we got a big report tomorrow that's really going to get a lot of attention. And that's the personal income and outlays, because that's when the PCE number comes out, which is the Fed's preferred measure for inflation. So what do you think is going to happen there, Greg?
Well, I personally think we're going to get a hot report again. But we'll see. I don't know. I mean, it's, we have had, some drop in some of the measures that they've been looking at. We did actually get today, we got a worse than expected jobs report. So maybe we're seeing the employment market slow down a little bit, but I think that inflation is such a lagging indicator that I still think we're going to get an ugly number tomorrow, and we'll see how the market reacts to it. I mean, let's do another one of these tomorrow.
Yeah, I was going to say, I'm with you. I lean a little bit hot or not dropping as much. I think maybe flattish is where we might come out in PCE. And if it does, we'll see how the market responds. So I'm a little bit surprised with, the market being as strong as it is with this big, what should be a significant report tomorrow. So how about we circle back? We'll wrap things up here. We'll circle back tomorrow and talk about the PCE and what we've learned in the past 24 hours.
Okay, we got to end it with this. Astros are the favorite to win the World Series this year. Of course, the defending champs. You've got the Braves not too far behind, the Dodgers and Yankees and Mets all not too far behind. Who's your pick to win, and then maybe who's your dark horse you think could pull it out? Surprise.
I always got to go with the Cubs, and they're like 8,000-1.
Good bet right now.
What's that?
That's a good bet.
Yeah. Well, if I go to Vegas, I'll always bet on that.
Go put $100 on the Cubs and give you a good payout.
Who jumps out? How about the Mets? I hate the Mets, but I get a Mets vibe.
Okay, well, I'm going to do the same thing. I'm pulling from I think the Dodgers, even though they lost Trey Turner, they lost Justin Turner, they lost Cody Bellinger, they lost some of the key people who helped win the title in 2020. I'm still going with the Dodgers. They still got a pretty solid team with Freddie Freeman and Mookie Betts. And my surprise, I've already said, I think the Mariners are my dark horse. I think they could surprise people this year. They're really good, young team. So, all right.
Yeah, I'm just glad baseball's back.
Me too. Love baseball. Let's go to a game.
Yes, we should plan that.
Okay.
We're going to be, speaking of planning, traveling, we're going to be in Orlando for those of you that are interested. We're doing a one-day event if you're local to Orlando, and we got a bigger one coming up in June in Austin.
Orlando is the 22nd of April, so it's in about a little over 3 weeks.
Yeah, so if you want to come out and meet us, you can reach out to optionsanimal.com and reach out to one of our people and see if we can get you an invitation to show up there.
Yeah,
and then also in Austin in June is going to be a 2-day event. That's a members only event. So maybe you want to become a member then. But yeah, we'll look forward to seeing you.
Okay. We'll see you all tomorrow.
All right. Take care. Bye.
See you, everybody.